All right, when it comes to real estate investing, you've heard people talk about buying properties without any money. And in this video, I'm going to show you exactly how to do that. Okay, so you guys have heard people talk about buying real estate without using their own money. And in today's video, I'm going to be showing you guys exactly how to do that. And it's through what they call creative financing. And in this video, the creative financing strategies that I'm going to be talking about, seller financing and subject to. When it comes to seller finance, all that means is you're going to be making payments to the seller instead of giving them a lump sum of cash. When it comes to subject to, all you're doing is buying a property subject to the existing mortgage, meaning the seller is going to leave their mortgage in place and then you're going to make payments on behalf of the seller. So in either situation, you're going to come to the table with little or no money. The best way to show you guys what seller financing is or what subject to is by showing you guys step by step of what the mechanics are behind it. Okay, we're going to start with seller financing. Let's say this person here wants to sell this house and they want to sell the house for $100,000. So you can agree to give them $100,000 in cash, or we could do seller financing where we offer them that we're going to make them monthly payments instead of giving them $100,000 up front. So maybe we give them $1,000 per month until we pay off the $100,000. In a nutshell, that's all seller financing is. Instead of giving them $100,000 up front, we give them $1,000 a month, $2,000 a month, whatever works for them, whatever works for you. You got to negotiate that. But essentially, you're just making payments. You're not giving them the whole lump sum. Okay, so now let's talk about subject to. The same person wants to sell their house for $100,000, but they have a mortgage of, let's say, $75,000. So that means if they were to sell the property to somebody all cash, that they would walk away with $25,000 because of the $75,000 mortgage. So the bank or whoever is going to provide the money, they're going to give the seller or the title company the $100,000. The title company is going to pay off the $75,000 mortgage, and then the seller is going to take the other $25,000 that remains. So now, how does this work for you? Well, instead of you going out and getting a bank loan, you ask the seller, hey, may I take over your payments for the $75,000 loan? Maybe their $75,000 loan has monthly payments of $1,000 a month. You say, hey, I will give you $1,000 a month, or I'm sorry, I will make the payments of $1,000 a month to your mortgage so you no longer have to make those payments anymore. And then I'm going to give you the $25,000. So now the question comes, where do you get the $25,000 from? Well, maybe you can do seller financing for that part. So the subject to takes care of the $75,000. You're going to make $1,000 payments towards the $75,000. And then for the $25,000, maybe you tell the seller, hey, I'll give you $500 a month until I pay it off. If you do that, then you have both the $75,000 covered and the $25,000 covered. I can hear it now. Why would anybody want to do that? Well, number one, taxes. All right, so if the seller does seller financing, instead of receiving all of that money up front and having to pay all of the taxes on that money, they're only going to have to pay taxes on whatever they are receiving. So if they're getting $500 a month, $1,000 a month, they're only going to be paying taxes on that amount of money because that's all they've collected. And then because they're collecting a lower amount, their capital gains tax doesn't put them at the next tax bracket. So they might be at a lower tax bracket by only taking payments. Number two reason is because they can profit more. Okay, so they can profit more. So in this case, you see how there's $25,000 that they were going to receive. Let's say you tell them, hey, I'm going to make $500 a month payments and I'm going to continue to make them until you collect $30,000. So that extra $5,000 that you're paying them, that's essentially interest. So you're going to be paying them an extra $5,000. They're going to collect $30,000. That's more profit than they would have gotten if they just sold it to you and received the cash. So more profit. All right, number three, less fees. All right, and which fees am I talking about? Real estate agent commission fees. So if the seller is selling to you directly, they don't have to pay for a real estate agent to list and sell the property for them. So they're saving the 6% or 5% or whatever they were going to pay their agents. They're going to save that fee because they're selling directly to you. So you can use that as a pitch as well, like, hey, sell it directly to me. I'm going to give you more money. You're going to save on taxes, and you're not going to have to pay any real estate agents. All right, here's the last one, number 4. Number 4 is as is. Oftentimes, I like to tell sellers that I will buy their property as is. They won't have to do any repairs if they will sell to me, seller finance or subject to. And it's kind of like, hey, you give a little, I give a little, right? I give in the sense that I'm going to buy it as is. You give a little by allowing me to make payments on your mortgage, or you're going to allow me to make payments to you for the equity that you have. So as is a selling feature and one that I bring up to them. Now, I get a lot of questions about creative financing, like, Hone, what if you don't make payments towards the mortgage? Or, Hone, what if you don't make payments to me? I often say, if I don't make the payments that I said I would, then you are going to leave this situation better than you came into it. Meaning, sometimes I like to give them that money up front. So that $25,000 that we talked about where they had a mortgage, let's say we paid off the $75,000, then there was $25,000 left. I sometimes will give them that $25,000 in cash and make payments towards the mortgage. And then the question is, Hone, what if you don't make those payments? Well, you get the house back and you get to keep the $25,000. So they really like that answer, right? Because it puts them in a really good position. They get the house back, they keep the $25,000 and any repairs that I might have made to the house. So they win big time by taking the house back and having collected some money. If it were a subject to and seller finance situation where I brought no money to the table or they didn't get anything from me, well, there's possibility that I've already made some payments. So again, they get to keep that. And then I'm also going to do repairs. There might be a tenant in the property, so they get the property back with a paying tenant. So situations like that exist as well if I didn't make that big down payment. The truth of the matter is, usually people who agree to a seller finance or subject to kind of deal, they're not in a good position. Because if they were in a great position, they would just sell it with an agent and put it on the market and do the traditional route. But there's something causing them to need to sell either quickly or for max dollar or whatever. And through creative financing, I can offer them what they need, because sometimes that traditional way doesn't work. So they're in a situation and me presenting this offer to them, sometimes it's like a hallelujah, and they're not really worried about me not paying them, even though that should be a concern. They're not worried about it because I'm going to be helping them out of the situation that they're in, that the house is causing, that something's happening, and this house needs to go, and I am that solution for their problem. So a couple of things that you want to keep in mind when you're trying to offer seller financing or subject to a seller is you want to ask what's in it for them, right? What's in it for them? Because a lot of times I see investors, they only worry about themselves and they're thinking like, okay, I'm going to make these payments, this amount at this much interest or no interest at all, right? They're just trying to maximize the situation for themselves, but they're not wondering what's in it for the sellers. So that's why I brought up the fact that there are these 4 things that you can bring up to them. Hey, you're going to pay less in taxes, you're going to make more money, you're going to pay less in fees, and I'm going to buy it as is, right? So there are things that you can present to the seller that makes it worthwhile for them to actually go for it. Maybe in a future video, I'm going to go over how I negotiate with sellers to offer this. Oftentimes people ask me, hey Hone, where do you find sellers that will offer seller financing or offer subject to? And I say, you don't find them, you create them. You create sellers that are willing to do seller financing or subject to, because usually sellers have no idea what you're talking about. They just want to sell their house. They don't even know that seller financing or subject to is an option. So it's your job as the investor, as the buyer, to educate them in such a way that doesn't scare them off and makes them see all of the benefits of doing that creative deal with you. It's almost needless to say, but these creative strategies allow you to buy more properties, and that's the big benefit for you to learn this stuff. But there are also a lot of benefits to the sellers as well. So I want to make sure that you guys know that, because when you're talking to the sellers, they're gonna need to know that, because of course they're gonna want the easiest, fastest, most profitable deal that yields them cash without worry. Now you can offer this in such a way that they see that this is even more beneficial to them than maybe just going that traditional route. Like I said, maybe in the future, I'm going to do another video on how I negotiate with sellers, as well as all of the paperwork that you're going to need. There's documents that you need in order to do this right. But until then, go into the description and go find a link to download my AI prompting tool. That's where you get to use the prompts that I use to analyze my deals. And all you do is plug it into your favorite AI model, and then it's going to help you figure out whether the property that you're looking at is a deal or no deal. So it's going to ask you a series of questions based on what I consider are important for you to analyze a deal. It's going to ask you step by step, what's this, what's this, what's this, what's this, and at the end it's going to tell you deal or no deal. Pretty simple to use. You don't have a proprietary system that you're locked into, no calculator that is hard to use and you got to stumble through the buttons and learn it all. Now with AI, you just say, hey, I'm just trying to do this deal, and then it's going to ask you what are the numbers, and then all you're doing is pushing in the numbers. And if you don't know them, it's going to use assumptions from industry standards, which is pretty cool, because some of you guys don't know what these numbers are yet because you're still brand new, and that's okay. This AI prompt is going to be so easy for you to use. It's going to build so much confidence, and you're going to be able to do so many more deals. So again, go into the description, find a link to download my new AI prompting tool. All right, guys. Put in the comments below, let me know what you want to see in the next video when it comes to creative financing. Like I said, maybe I'm going to add some negotiations, maybe I'm going to add some paperwork, but what would you like to see in part 2 of this video? Let me know below so that I can make sure I can incorporate that in the next video. All right, guys, that's it. See you in the next video.